Global shares were soft over the past 24 hours as they do close down on the last day of September. But in general, when we consider what has happened over the past month, global equities have been pretty positive. The Europeans did get the jitters over the past 24 hours after the Irish banking system needed another bailout. Allied Irish shares fell by 28% overnight after the Irish government had to put in more money to help them out. This does take the total bailout package to the Irish banking system over 50 billion euros, which in context is about twice the amount of total debt in New Zealand's agricultural system. The Irish Finance Minister also indicated that this is not sustainable and that they are probably going to need some outside help. The Kiwi dollar remains strong against the US and on Friday morning is trading at 73.35 against the US, but has softened a little bit against the euro. It is now under 55. The 1st of October 2010 marks a big change for the New Zealand economy and in terms of our tax framework. The proposed changes by the government now come into effect, and these include an increase in the GST rate from 12.5% up to 15%, a drop in the corporate tax rate, big drops across the board in terms of tax brackets for income earners, and also changes for investment property owners in terms of their depreciation schedules. All of this is a big change for the government to try and drive people away from consumption into more investment assets and also into savings. This will provide a more solid base for the economy down the track and also drive investors into more productive assets. International dairy commodity prices have seen very little change over the past week, although when considering them on a longer term basis, they are at very strong levels. We remain very positive about dairy commodity prices over the next 12 months, despite some increases in supply from some areas of the world. US and EU production have increased over 2010. The outlook for our own season here in New Zealand is also looking pretty positive, with production increases likely. However, on the demand side, demand has increased in most of our markets. Chinese demand will remain robust as their economy continues to expand. Russian demand has also come to the fore as there are some concerns about drought and food production in that part of the world. All of this does indicate that prices should be strong over the next 12 months, and this will be a key underlying factor for payout in the coming year.